Hi, welcome to this video today, which is on the 23rd of June. It's Sunday. We're just going to be using simple trading techniques today that involve Bollinger Bands and price action to catch market reversals when a market is run too far to the upside or too far to the downside. Today's example are markets running too far to the downside, but they work in the opposite direction as well. And we will use these trading techniques frequently. If the trade setups we're going to look at come off, you get really fantastic risk to reward. Now, in relation to the trade entries, they're going to be using minimal confirmation. I'll explain why when we get to the charts. Now, in terms of the trade setups we're going to look at in relation to the techniques, they're going to be the USD CAD, USD NOK, obviously Norwegian krona, and USD SGD Singapore dollar. Now, the dollar did have a big sell-off after the Fed last week into the end of the week. We believe that sell-off is overdone and we will see a reaction to the upside in the dollar. Now, in terms of the charts, we will go and take a look at them right now, but please do keep in mind, it is my view, as of this moment in time, it can change in line with the market conditions if you want. All our trading techniques are daily technical sentiment analysis of 14 Forex pairs you can get live access to our member center on the link beneath this video. Right, we're going to do the trade setups. I'm going to start with USD CAD first. Right, on the chart of USD CAD, and in terms of using Bollinger Bands and price action, you just use them alone together. What we like to do, just to get more confirmation, is to look at the sentiment behind the chart. Just give us more confidence in the setup. You can do it either way. Now, in terms of Bollinger Bands, just to explain them for anyone who doesn't know how they work, spikes outside of the outer bands on high volatility tend to revert to the mean or run band to band. Okay. Now, here are the outer bands in orange, one top, one bottom, and then you've got the mean price, a simple 20-day moving average in the center. Now, the bands, when they're wide apart, the volatility is high, and that shows there's a lot of interest in the pair. And when you get the high volatility, like here, when you go outside of the band, you don't stay there for long, you revert to mean. You don't follow through to the other band on this occasion. You drop outside of the outer band again, then come back in at the mean, and then eventually band to band. Here, you've got some pokes outside of the band. It is low volatility though, okay, because the bands are quite tight. Then she falls, the volatility picks up, big outside the outer band, revert to mean, then fall again, bands are wide. We're already coming back within the band, so I think we should go to the mean and possibly run band to band. Yeah, it's just really an indication of greed or fear pushing prices too far. Then you get the recoil. Okay, and markets always do that. They'll push prices to overbought or oversold, and then you'll come back to the mean price or maybe run on band to band. Now, in terms of why has the US dollar sold off here? In terms of the reason, and it applies to all three pairs we're going to look at, a divided Federal Reserve last week held the line on interest rates. So when they met, they didn't make any changes and indicated formally that no cuts were coming in 2019. So, no cuts coming. You can see that from their dot plot where they all give their views on where interest rates could go further forward. But the decision came amid divisions over what is ahead and still leaves open the possibility that policy loosening could happen before the end of the year, depending on how market conditions unfold. That's from CNBC. So they held rates. They didn't indicate any rate cuts were coming, but they did say they were cautious. Now, how did the market read the meeting? Well, the market concluded from the meeting 2 rate cuts this year alone, with one 100% discounted for July, that's next month, and then 3 more through to the middle of 2020. So the market is seeing 5 rate cuts. The Fed aren't seeing any yet, although they're cautious. So the move is overdone, okay? Two sides to a currency. The CAD has been firm on recent data, pointing to no rate cuts this year, but there's no rise coming either. Economy is going to slow as global growth slows. So really the bad news we think is in the price for the dollar. This one is in our member center and we have already gone long. Big tumble. And then this candle tail here, the red one, outside of the outer Bollinger Band, this tail here doesn't reach that tail there. So basically we think selling's exhausted. We'll come back long within the band. So it's quite an aggressive entry. So if I just do a trajectory there, it looks like exhaustion of selling. We're coming back within the band. We're long at 132.20. Okay. Now, in terms of what's important as well for us is when we spike down here, below a round number. Round numbers are always important. We want to be back through the round number, and that round number, will line up with the two bodies now. Okay, so selling looks like it's exhausted. Okay, if you wanted to do this trade, I'd just recommend coming in on strength above 132.20. Where could we go to and where could you stop be? Well, we should gravitate back up towards the mean. You don't actually have to use the mean exactly. You can use the nearby round number. It's just an indication. So we should go back up to 134. And really, I think 135 will run effectively band to band. This band will obviously creep down, that band creep up if price action goes to the upside. Now, in terms of where should your stop be? My own view is the moment I put our stop at 130.70 because I didn't think it would get hit. If we move on through that high there, on Monday, the stop will come in behind this tail, probably 20 pips clear of it. Okay, so if you're coming in, I'd just do that. Just wait for that high to get cleared out and then see if she runs the upside. Now, in terms of the upside potential against the risk, I think it's pretty good, and I think the probability is pretty good on this one as well. Okay, so you've got basically about a near enough a 5-to-1 to second target, and I think that second target is achievable. Now, in terms of not using much confirmation, I don't tend to turning points because you want to get an aggressive entry. Okay, if you wait for too much confirmation, your risk against your reward is not good enough in my view. So we'll always tend to do the aggressive entry. And this one is, and we'll see what happens with it. Now, in terms of the next pair, USD NOK, it's even a more severe setup in terms of the fall than this one, in my view. I think it looks a great looking swing trade. So let's go and take a look at it. All right, I really like the look of this chart, which, basically it's nice and volatile, isn't it? You've got plenty of nice big moves outside the band and then retracements within or moves back within, like here, all those blues outside their back, get to the mean, another go outside of the outer, all the way band to band, it gets outside and comes back to the mean. Here, look at it, massive fall at the whole bar outside of the outer Bollinger Band. Not the whole bar, sorry, the whole body. In terms of the USD, we've seen why market sold the USD. But in terms of this pair, the NOK had some really good news on the other side as well. What good news did it have? Well, not firm on crude oil. I mean, crude oil prices were pretty firm last week on US-Iran problems. I think they've abated a little bit now, and we're pretty bearish of crude. Also, Norway's central bank raised rates by 0.25 percentage points to 1.25. So basically, they've hiked their rates, but they're only half of what the dollars are anyway. And the move is just overdone. And we're coming into a zone here where the dollar found support before. Okay, now I just want to draw a line there, which is 850. Just got beneath the level. Okay. In terms of buying this one, where do I want to buy? I'm going to use minimal confirmation. I just want to see it get back above 850 and just above 853, and then I will go and buy it. Okay, and in terms of where the stop will go, I'm going to use all straight lines on this one. Stop will just go back behind those bodies. Okay, so basically we want some strength back above 850, then just a little bit of confirmation, then the stop a little bit back from 850, then see if she runs. Now, in terms of where could we go, I think towards the mid, so 870. Okay, and I actually am looking longer term for a move all the way back to here. Okay, now in terms of looking for minimal confirmation again, you've got to keep in mind you've had really good news on one side for the knock, and then traders, in our view, misread the Fed and pushed the dollar down. So it's kind of a double whammy, isn't it? So risk reward looks really good. It's about 4-1 to first target. If we got on to second, it'd be about 6-1. Obviously, manage the trade as it goes, but I just don't want much confirmation on this one at all, because good news is now in for the knock, bad news is now in for the dollar, and the whole body outside of the outer Bollinger Band. So we're looking for it to go back within the outer band and then up. Obviously, manage the trade as it goes. But again, with these kind of aggressive trades, you get really good risk to reward, and you're going to get a result quick. You want your money working, don't you? I'm hoping we're going to get a good result, but we shall see. Right, let's move to our last chart, which is going to be USD SGD. All right, last chart, USD SGD. You can see a nice fall there. Reversion back to the mean price, and another big fall, basically just at the outer Bollinger Band. Now, in terms of this trade setup, mostly do with dollar weakness rather than anything going on the other side in Singapore of significance. Singapore, pretty weak economy at the moment due to the Asian economy slowing up in China, and they'll probably cut rates going forward. So mainly to do with dollar weakness. Now, big red falls outside of the outer Bollinger Band, settles back within it. Then we come down, basically settling on the Bollinger Band. You've had this poke lower through, obviously, that tail low there, but there was no volume here on Friday. So it looks like the selling could be abating. Okay, so that low, I think, will hold, but you're not going to put your stop there, in my view. Just going across to support. You can see it, a bunch of candles here. I've done the line at 135.50, tail on the body. Stop would have to be back behind this level here. Just give it a bit of room. For people who are on my mailing list on Friday early in the day, I was saying possibly buy it back through 136. I wouldn't wait that long now. I just come straight back through the two candle bodies. Okay, so the close there, the open there, and then see if she runs, stop back behind this level. Obviously, it runs on the downside. You can always lower your entry, but I think, because the selling kind of dried up on Friday and the last candle's fairly small, I think an aggressive entry is warranted. Again, where could we go to? We should retrace that, and then possibly all the way back up to 138. So again, about 3-1 to the first level, about 4.5-1 to the second level. Obviously, manage the trades as they go, but just feel overreaction to the dollar. It's probably due a little bit of a shakeout anyway, because there were quite a few speculators long. But the big fundamentals, I think, will reassert themselves. You look at the dollar from a longer term perspective, it looks pretty bullish. Okay, from longer term charts, solid economy, interest rates pretty good, and the idea of them being cut as quickly as the market thinks, I just don't think so. But that aside, the dollar should retrace its oversold condition, not just on these three pairs, on many pairs. Okay, but I really like trading with Bollinger Bands, and knowing the sentiment behind the chart as well, obviously, because you then can go for the aggressive entries, and that gives you good risk to reward trades. So all three, not really waiting for too much confirmation. Think we will get the two setups. We're obviously already in one. Obviously, if we drop lower, we can always just trail our entry down. That is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.